All right, and we are live, ladies and gentlemen. Welcome back to Vbit Cast number 2. The date is March 19th, 2020. I'm joined here today by Don and Jason, the two resident Bitcoin big brains. We're here to discuss cryptocurrency and its role in the global markets today. Very excited to be here. How are you guys doing today?
We can start talking.
Good evening, everyone. So we are live here in our corporate office here in beautiful Philadelphia, Pennsylvania. Even though the city is having us under a quarantine order, but we are here in the office trying to provide.
You might have to mute on your side, if possible. I'm getting a little bit of feedback from the playback.
Sorry about the background noise. So we are live here in our Philadelphia corporate office, even though Philly is, technically under a quarantine order. What they call it, non-essential businesses should be closed, but we are here in the office and trying to provide all our members with this most important and up-to-date Bitcoin actions that are going on today. Because I don't know if everybody, even though I don't know if everybody is staying up with the price. The Bitcoin price actually had a 15+% jump, while the Dow's is going down, gold's going down. But Bitcoin is the only winner for today. With that, Don, you have anything that you would like to add to it?
Yeah, I'm actually really excited to give you guys an update of what's going on in the markets today, what I see, and I'm actually really happy to see that there has been a really big price jump in Bitcoin because it kind of validates my view that I was trying to project to people since last week after the market downturn. I hope everybody's staying safe at home today. Definitely, stay safe. Take this coronavirus very seriously. Try to keep yourselves out of trouble and stay well, guys. But on another front, even though all of our employees are working from home today, everything is running in full capacity. All of our Vbit data centers, all of the computer servers, they're running at full capacity. So there's no slowdown there. And that's one of the nice things about Vbit, right? And Bitcoin mining. Even though you can't show up for work or you're quarantined in your house, you're still making passive income. Right, Jason? Do you like making passive income?
That is a great point. I love making passive income, especially in times like today, right? When most people cannot go out there and make a living, we are so fortunate because we have our mining packages. Our mining packages are actually mining Bitcoins for us on a daily and basis. The reason why our data centers in various locations are operating at 100% is because machines are doing the hard work, right? Machines cannot be infected by coronavirus, fortunately. So with that being said, I do feel very fortunate that we are in this business together. Our machines are mining Bitcoins for us, even though we cannot go out there. Many people cannot go out there and go to work. We're still making passive income. We're still making income for our family. So,
and with that being said, there was this. I read a lot of news articles last week that was floating around the internet, basically bashing on Bitcoin and how Bitcoin can't be a safe haven asset because it was crashing with the market. But then when I took a deeper look into the reasons why the markets were sliding by that much, because it's actually one of the largest slides in in history, basically, and it's not only pertaining to Bitcoin, but just straight across the market, from the U.S. stock market to even gold, right? So last week I was already telling people that don't buy into all the different FUD that was going around last week about how Bitcoin can't be a sustainable hedge against a global crisis, basically. And there's only one true safe haven, and that's going to be your gold, your silver, and your precious metals. And the reasoning they were saying that was because they saw Bitcoin take such a large slide last week, along with the Dow. As you know, the Dow crashed by over 2,000 points last Thursday. But then when I really, analyzed the markets, what I saw is, yeah, what I saw is it wasn't only the Dow that slid, it wasn't only Bitcoin that slid, but it was actually gold that slid too. And James, can you show them the gold chart for the past week?
Sure thing, absolutely. I have pulled up right here real quick before I switch. This is the 5 day slide. Here's the 7 day. You can see the slide a little bit more dramatically. So this was the Dow that he was just talking about. I'll pull up gold now for you.
Hmm.
Gold. So here's the gold 5 day, and then more closely, here's what the 7 day looks like.
Okay, awesome. Thank you. And just give it 1 second. So what what you see here is basically in the past week, gold hasn't really progressed anywhere. Like last week when the markets were sliding, when the Dow was sliding, when Bitcoin was sliding, you see right there that gold was actually taking a really big hit too. And over the past week, you just see, like gold on a straight downward spiral, along with, the Dow Jones. But if you, and that is the reasoning behind it is, like everybody was getting hit with a margin call basically last week. They were running, for the door to get liquidity because nobody expected the coronavirus to be declared, a pandemic, and nobody expected this basically a lot of different countries to lock down their borders and bring businesses to a screeching halt, basically.
Yeah, Don, just before you jump into all the technical stuff, margin calls are essentially where a brokerage would allow its account holder to borrow so many times of what they have deposited in the account. Like for example, a traditional maybe stock, brokerage may allow you to borrow up to 2, 3, 4, 5 times. However, in the crypto market, there are brokerages that would allow you to borrow up to 100 times. So imagine this: if you have $100 in your account, you can borrow up to 100 times. What is that? That's like $10,000. So for every dollar movement, upward or downward, of the Bitcoin price, you are being hit with either a tremendous amount of profit or a tremendous amount of losses that if you have a loss, a brokerage company is going to want you to make up for that loss immediately or within certain very short period of time or window of time. So, and that's what causes a majority of the downward pressure on Bitcoin price. Go ahead, Tom.
Yeah, well, thank you for explaining that for us, Jason, because I'm sure a lot of our viewers are not really technical and they're not really familiar with the financial markets. So it's very important to understand what a margin, what trading on margin and what margin calls are. And as Jason explained, when you don't have enough money inside of your account and that asset, be it like stock or gold or Bitcoin or whatever it is that you might be holding, slides by a certain amount of percentage, which like last week it has slid so much it basically triggered everyone's margin calls basically. So it was a systematic failure. It was a systematic downward spiral. It wasn't exactly like people going into their computer and hitting like manually selling themselves. It was just a computer algorithm that was taking place. That's why like the slide was so deep last week. And I like when I look across the board at all markets and I see everything sliding and taking like a slide by that big of a percentage. And so, some of us out there take a look at the gold chart and they say, oh, but gold only slid, let's say 3% or 5%. That's such a small percentage drop compared to all of compared to the crypto market, compared to the stock market. But if you really think about it, because gold, the market cap for gold is trillions of dollars, basically. So basically a 5% drop in gold is hundreds of billions of dollars. It's already more than the whole market cap of Bitcoin altogether. So that means that gold, dollar value wise, if you're not just looking at the percentage, but you're looking at the dollar value, gold has actually dropped a lot more than what Bitcoin did, or what the rest of the market has been doing.
very good point, Don. Here's another thing that I want to point out there, which you mentioned earlier. I don't know if our viewers actually were able to catch that. Is that a lot of these professional traders who especially are trading on margin accounts, they have a stop loss order or trigger that's already set in, price automatically set in there. So they might say if the price of the Bitcoin drops by more than 20%, it will automatically sell whatever positions that they have. Then they have to make up for the losses, and make up the losses. So a lot of these were all hit at the same time when Bitcoin price have, let's say, a 10 or 15 or 20%, and then spiral that with auto sell order, and that's what causes all these massive drops at the end of the day.
And basically, what confirms my analysis and what confirms my view is if you take a look at the past 7 days, right? James, can you bring up the 7-day chart of Bitcoin as well? If you take a look at what happened in the last week, basically, like on Thursday, that was the massive slide across the board due to the margin calls, and you see that Bitcoin actually stabilized because after that, all the margin calls triggered, everything that was done afterwards and all the performance after Thursday, let's say Friday, Monday, all the way until now, right? People are actually actively managing that. So people are actually manually going in to their accounts and selling off or buying certain assets. And what you see here with Bitcoin after the slide on Thursday due to the systematic sell-off, it has been pretty much staying steady all through the weekend, all through the week, and then today it spiked up by 18%, about 18 to 20%, depending on the time. So what that shows me is it's not that people don't see it as a safe haven asset. It's not that people don't see it as like a good store of value for them or as a good hedge against the crisis the global crisis that's going on right now, but they need it to, because now people are actually being put out of work, and people have to stay home, and unfortunately most people work live paycheck to paycheck. So if you're not able to show up for work for 2 weeks, for a month, that's going to be that's going to cause a lot of pain for you and your family. So it's going to make people go and take a look at their portfolio and liquidate whatever they can to get the cash to kind of keep it there for their monthly expenses that they anticipate coming up. But not only that, right? They will, liquidate basically what they feel like it's not gonna, go up in value or not gonna go up in value as fast over that short period of time. So what I'm seeing in the charts is gold didn't even, gold, the traditional safe haven asset, which is normally seen as the number one, asset to run to when there's a global crisis. It actually didn't pick up, it didn't pick up any gains over the past week. It actually has lost value over the last week. So people don't even have, as much faith in gold. That's why they're pulling out money from gold to get that liquidity, that short-term liquidity that they need. Whereas Bitcoin, it has pretty much, stabilized. It held its own ground over this past week. It hasn't continued to slide with the Dow, and now today we see it up by 18%.
Yeah,
so,
I really believe that.
Just to chime in for 1 second, just to reiterate what you're saying, to confirm from my side too, Don. That's part of the reason why you wanted to do this this live stream, because there was a narrative building around Bitcoin not being a safe haven asset, and people were putting out articles saying, "Look, guys, Bitcoin. Everyone thinks it's this safe haven asset like gold. Even Bitcoin's getting affected, right?" And that narrative started to snowball a little bit, and then just the recent days have proven that it's rallied so well, even better than gold. Gold is looking worse off in this current meta than Bitcoin.
Yeah. Yes, exactly.
Sorry,
And like what I encourage people is to actually do your own research, right? But also take a look at the different sources. Don't Not everything that you read online is automatically true, right? Because everyone is publishing articles for their own purposes as well.
Sure, and based on what they believe in too.
Mhm.
So, a couple of pretty prominent articles that were published with the author himself is actually big holders of traditional gold. So
Mhm.
obviously he's been in that market and he doesn't want gold to tank. So he's bashing other asset class. Right?
Mhm.
So do your own research is absolutely key. So.
Mhm. And just to chime in on that, right, Jason? I wanted to basically call out Peter Schiff here for a minute. For those of you guys who are not familiar with Peter Schiff, he's referred to as the gold bug. He's a really big believer in gold. He has a gigantic investment bank that caters to high net worth individuals that he steers them, to different investments in the gold sector and the traditional markets. He has always been, a firm disbeliever, like in Bitcoin and in crypto. He's always been going out there, putting out articles and making statements that, like Bitcoin's not going to go anywhere and it's not worth anything. So last Thursday, and what I find, kind of funny is last Thursday, after the Dow tanked by a couple of thousand points after Bitcoin, had the historical tank last week, he went on and he said, see, Bitcoin can't be a safe haven like gold because now with the global crisis where Bitcoin is supposed to sustain its value, it just took a big hit too, and it took one of the biggest hit in history. So how can Bitcoin be a safe haven? But what he failed to mention is on that same day, gold took a big hit too. And US dollar value wise, gold actually took a bigger hit to its market cap than Bitcoin did.
Right, because Go has so much bigger in terms of the market cap compared to Bitcoin as a whole. So, right, so a lot of time we have to be careful when we read these news articles that are coming across our computer and just kind of have to question about the motives and is everything that author that writer that says on the article is true, right? We're so lucky, and I also always feel fortunate that I have Don here that are very attuned to the market, to the industry. When I have a question, I always bring it up to Don and ask him about it, and he can, very quickly debunk a lot of these misinformations that are floating around in the marketplace.
And you guys can see, Jason likes me so much, he's starting to turn into my twin. But of course, I'm the better looking twin, Jason.
Yo, Don. So when Bitcoin dipped down here on the 13th, it took that huge hit, as you can see here on this graph. What did it actually dip to? Do you remember offhand?
It dipped to about $3,800. But here's the thing, right? Let's say with the Dow that where it dipped over 2,000 points, you still don't see it, recovering from that low yet. Whereas once Bitcoin dipped to $3,800 due to the systematic sell-off, just the automated sell-off, people came in immediately and saw, oh, this is such a really big discount. So they immediately came in, and within 15 minutes of it hitting $3,800, it spiked all the way back up to over $5,000 again.
That's crazy. So if you bought on the 13th, because isn't that when we did our podcast or somewhere around there, right? Maybe like in the day after or something, you would have already made, not quite double your money, but you would have made,
almost double your money.
Yeah, almost double your money, which is pretty insane.
Right. So James, here's a perfect example to kind of talk about this, right? Most of us cannot predict when the market is going to be the lowest or when's it going to go up, right?
No, not most of us, Jason. There's nobody can predict where the bottom is.
But, when Bitcoin price hit 38, there were news articles flowing around saying, oh, it's going to go to 1,000 or maybe even 0. Obviously, that didn't come true. But it's so tough to try to make money by trading. Right, and that is why I love our platform, whereas we just mine Bitcoin so that we don't have to worry about, where the prices are at any one moment, because we know if we average it out, we're going to be taking advantage of the dollar cost averaging, right? So at $3,800, all our members receive, their proportionate Bitcoins that they mine that day at about $3,800. So you are actually benefiting when the markets are at its lowest, right? And I would suggest that everybody please hold on to your Bitcoins. If you need to pay for your installments for your package, pay for it with your fiat. Hold on to the Bitcoins because it's going to come back up, as I personally believe. And it already has, like we cover over 50% from $3,800 to today. So
Even if it just recovers back to where it was, it's still basically on discount right now. If you purchase them right now, if it goes back up to what was it, $9,000 a few weeks ago? That's even this is still an opportunity.
Yep, it is still on sale. It's a great opportunity. But here's another best part about it. We have been seeing the hash rate has been going down. It's been going down for about maybe 25, almost 30% in the last 7 or 8 days. So when the new difficulty is going to be published on Monday, we believe that difficulty level is going to be dropping, right? So that means with the same amount of hash power that you have, you're going to be mining more Bitcoins. Isn't that a beautiful thing?
Beautiful thing. It's a beautiful thing.
Also, I want to just put it out there. If any of our listener or viewers have any questions or topics that you would like us to try to cover, please send it over via chat, and we'll do our best to accommodate that.
Yeah, and also another thing I wanted to touch up on, right? The hash with these downturns in the Bitcoin price, it really shows Vbit's strength in the market because we're not leveraged at all. The number one reason why you see such a big decrease in the hash rate is the average electricity rate around the world is actually pretty high. It's about 14 cents per kilowatt hour. So when Bitcoin price tanks to a certain level, those guys are going to become unprofitable first, and then they obviously it's human nature, right? Why would you want to keep on doing something that you're not benefiting from it? Like why would you keep computers running if you're losing money on it every single day that it's running? So obviously those guys have to turn it off first, and we get our electricity less than half of what the world average is. So and we have survived through actually the toughest crypto part of the crypto winter, where Bitcoin price dropped down to $3,200, and when it dropped to $3,200 at that time, it did not, quickly rebound back up to $4,000 or $5,000 like it did today. It stayed and it lingered around that $32,000 for a little bit of time, for quite a bit of time. And at that time, when a lot of our different competitors were turning off their machines, we were still mining profitably throughout that whole time period. So I really feel like this whole pandemic situation, it's actually going to help our business, because it's going to cause other, Bitcoin mining companies and Bitcoin miners with higher electricity rates to turn off their machines, and then all of our clients are going to start to mine more Bitcoin. Next week when the mining difficulty level adjusts, everybody's going to start mining more Bitcoin, and then when you have more Bitcoin, hang on to it, guys. I can't emphasize it enough. Hang on to it, because I do see through all of my analysis, every single angle that I'm analyzing, it all points to a recovery in the Bitcoin price. Bitcoin price will go back up to where it was, and not only back up to where it was, but a lot higher than where it was. So you want to hang on to the increased Bitcoins that you're going to be getting now, starting next week. You're going to be you want to hang on to that.
That's really reassuring, man. I just want to shout out Kella Good really quick. Kella Good Thank you very much for your comment and question and the engagement as we're just starting to ramp up with these podcasts. Kella asked a question. I'm not sure if Jason or Don, you might be able to provide some feedback on this. She read an article yesterday that Bitcoin panickers drew the BTC down by trading 159,000 Bitcoins in a day or 2 days when everything was crashing versus 52,000 per day. That is 3x the norm. That's why it got dragged down. It's like a sell-off in stocks to avoid more losses. How do you feel about that?
Yeah, and that's basically exactly what happened. And the increased selling pressure again, it's not only it's not only because people actually manually went onto their computers and hit the sell button, but it's just a systematic sell-off when the Bitcoin price slides a little and it's hitting people's stop losses, and their stop losses are getting triggered. The margin calls are getting hit. That's why there was such an increased selling pressure, and that's what led to the historical drop in Bitcoin price. Right now, Bitcoin is on fire sale right now. And honestly, I don't see it, like staying around these levels for a lot longer. I really feel that, especially with today's surge in Bitcoin pricing, right? It really shows me that people are looking to Bitcoin to use as a hedge. Because let's take it, one step further, right? I read in the news that the U.S. government is going to be printing over $1 trillion in new money.
1.3.
Mm-hmm. That means that there's going to be massive inflation coming into the future. And with all of that excess cash in there, they're going to need a place to kind of hedge against the falling dollar value. But
Hold up.
I'm
Quick
sorry.
interjection here too. Your Bitcoin would be less affected by that inflation, right? I mean, there would still be some sort of indirect impact on. What are your thoughts on that? So, if the government is putting 1.3 trillion, like you said, in injection cash, and all Americans are going to get, let's say, adult Americans are going to get $1,000, is that a case for Bitcoin? What is the impact on that inflation on Bitcoin, if any?
Actually, Bitcoin is built as a deflationary currency, so it is not prone to inflation. That's why you see what you can buy with Bitcoin today is a lot more than what you can buy with Bitcoin 5 years ago, per se, or 10 years ago. But what you can buy with the US with $1 today is a lot less than what you can buy with $1. 5 years ago, 10 years ago. It's because Bitcoin has a fixed supply. There would never be more than 21 million Bitcoins in the market, whereas the US dollar and regular fiat currency, the government can choose to print more money whenever they want, just like right now. They're
On demand.
Yeah, it's basically like an on-demand printing service, basically, and they're printing over $1 trillion. So when they're flooding the markets with more U.S. dollar, and then people are realizing that inflation is happening, they're realizing that their gallon of milk, instead of costing only like $3 for a gallon of milk, it just jumped to $4, and their dollar's not going as far. That excess money is going to start to flood into gold, safe haven assets, or assets with fixed supplies like gold and Bitcoin. So you're going to see that over the long term, because the U.S. government is printing more money and injecting more money in, the value of Bitcoin and gold and other safe haven assets is going to increase in value. Like any asset with a fixed supply is going to go up in value.
I also wanted to kind of ask you, Don, a question. When Bitcoin price start to drop to such a low point, I think a lot of people also take advantage of loss harvesting tax law, right? So that can also have an impact in terms of the transaction volume or the number of transactions that are changing hand, right? That one of our viewers was asking. So if I'm trying to take advantage of the loss harvesting, I would first sell one and then immediately pick up one right away, right? So that counts as two transactions, right? Two Bitcoins got transacted. I sold one and I bought another one immediately. So that would also have an impact on the Bitcoin transactions count too.
Mm-hmm. Yeah, that's correct. That would basically double count the same Bitcoin that's being transacted. But ultimately, the sell and immediate buy, it wouldn't have an effect on, the pricing. Bitcoin, because you're immediately, like rebuying it back. So you're kind of like washing out the negative effect of the sell. But on another token, I wanted to address, like what's going on with, like the U.S. dollar value right now, and with the Fed cutting the interest rates and stuff. So what I see is people are looking for liquidity because they're out of work, right? So they're selling basically all other types of assets, going into cash right now. So it's causing the U.S. dollar value to spike up like crazy against all the other global currencies. But that also puts all of the other countries in a little bit of a predicament here too, because all national debt and the interest rates that you're paying on, like the national debt, everything is counted in U.S. dollars, not in, let's say not the Chinese yuan but yet all the yes. And every single country out there carries a national debt. There is no country out there that is 100% debt free, right? But the problem for them is, the U.S. dollar is increasing in value, is strengthening against their local currency right now, and that means that they're going to have to use more of their local currency in order to make the payments for the national debt. But yet at the same time, they need to be able to cut interest rates to stabilize their economy as well. But they can't really, like cut the interest rates, because if they cut the interest rates and their local currency is weakening, they're risking they're risking defaulting on their national debt, and they can't let that happen. So the only other way that they can, kind of solve that problem is by printing more money. Yeah. But when they print, when everybody, all the governments around the world is printing more money, you're basically devaluing your dollar, basically your local currency, and in turn, with all of that excess money flooding the markets, eventually it's going to flow into Bitcoin, into assets with fixed assets, and this is really the catechist that I see that's going to jolt Bitcoin prices to the next new all-time high. Eventually, I do think like all of the price predictions out there, Tom Lee's prediction. Tim Draper's prediction of a few $100,000 per Bitcoin, even eventually, even John McAfee's prediction of $1 million Bitcoin, right? I really think that it is possible, because this is going to be the catechist that is causing, like all the governments from around the world to print more money, flood the markets with traditional, fiat currency, and people are trying to find a way to keep the value of their money.
I feel like I am reliving the 2008 financial crisis all over again. This is kind of like a deja vu. Whereas in 2000, this is when Bitcoin was born, in 2008, right? Mm-hmm. That time frame, because we were going through a financial crisis at the time. The U.S. government was proposing a $700 billion in emergency aid to like banks and insurance companies and to stimulate the economy. What are we talking about today? Today we're talking about 1.3 trillion. And
I've never heard that point before. That's such a good point, Jason. Comparing it to 2008, right. That's when Bitcoin was born, and that was another huge global crisis. That's
exactly, man. And then the EU were facing the same thing, right? They were printing money left and right.
That's when Bitcoin was born, and that was another huge global crisis.
Right, right, absolutely. So, but facing the same forwarding, a little over a decade. This time, the government's already committed to printing $1.3 trillion to stimulate the market, the economy. Actually, the estimates are as high as 3.5 trillion. And this is just the U.S. alone. EU is doing what they have to do over there. So imagine the amount of new fiat that are going to be pumping into the market, right? And that's what Bitcoin was built for. It's built as a deflationary, protection.
This is kind of a small brain point right here. It's kind of funny, maybe a touch of humor, or it's just interesting to think about. But if we're all in quarantine or lockdown and we have to stay inside, what good is a chunk of gold going to do for you? I'd much rather have a digital asset, right? Just on a very basic level. Gold is good, like it's a bartering tool, or if you have to go out and do something physical. But if we're all just living online in our own respective homes, just even when you go to a simple point as that, I'd much rather have Bitcoin.
I feel, James, when Bitcoin price actually, when all the asset class was crashing like last week, uh, a lot of time actually, a lot of us are feeling like we're in the survival mode, right? By survival mode, I mean, what is important? Well, maybe my bread, my milk, my cereals, my food, my daily living essentials, right? Um, so I think people are kind of coming out of that panic survival mode now. Started making some more senses to what they were doing, what the market was doing. Now they started to intelligently actually analyzing the market and looking at things and where they see opportunities going forward.
And one of the opportunities that this quarantine period is going to be presenting for Vbit too is, when people are out of work for 2 weeks, a month, they're going to realize, yeah, I need a plan B. I need something that I'm still going to be able to earn while I'm at home, right? And that's exactly the type of product that Vbit offers. We are offering basically your own computer that's going to work for you 24 hours a day, 7 days a week. And society is just systematically moving towards automation here. But it's not only the big businesses, it's not only the banks, it's not only like the big corporations that can take advantage of automation to their benefit, but it's now with Bitcoin, there's this opportunity for us too, that where we can take advantage of the systematic automation too. And what I mean by systematic automation is a lot of people don't think about this, but like now when you go to the bank, most people, they actually don't go up to the teller anymore.
Right.
Yeah, they actually just use the ATM. When you're going to let's say you're walking around the mall or something like that, do you really go, and you're thirsty for a bottle of water or something, that do you walk around to try to find a physical person to sell you a bottle of water, or are you just going to go to the vending machine, right? Mm-hmm. There's just so many of these like conveniences that we don't realize that it's all automated, and eventually it's going to take over our jobs, right?
Well, perfect example. Last week I was going to Sam's Club, and I used the app, and in their app they have something they call a scan and go. Right, so I already have my credit card that is programmed in there. I walked around the big box store, 40, 50,000 square foot. I picked up everything and put in my car. I scanned them, and I completely bypassed the line and bypassed the cashier. So, a lot of time we don't realize this is actually part of the progression of the automations. Cashier is going to be outdated. It's going to be obsolete, right?
Yeah, and I mean, for the people that can notice like these little details, and for the people that can kind of analyze your everyday life and see these little nuggets that are hidden, but it's not really hidden, it's right in front of you, but you just don't analyze it in a certain way. For the people who can, and the people who can recognize these things, you're gonna end up making a lot of money. You're going to end up basically in a much better position than the people who can't recognize these little things.
I agree, and that's why I keep going back to put part of your nest egg into mining bitcoins, right? Buy one of our mining machines and start mining bitcoins, because I truly believe that this is going to be a great way for you to add on to whatever other streams of income that you already have, right? They always say that in order to be successful, you always want to have multiple streams of income. And I believe mining can be a great addition to what you already have and build upon, build on top of that.
Especially since, mining, it allows you to basically take advantage of the systematic automation that's going on, because eventually, we don't want to think about it. Sometimes some of us don't even want to think about it, right? We choose to put our head in the sand, basically. But eventually, all of our jobs are going to be taken over by some form of a computer or some form of a machine.
Yeah, well, it's funny putting our head in the sand. I mean, I'll tell you, when in the last couple of days, I do want to put my head in the sand when the traditional equity market were crashing so hard, But when it compares to my mining package, I don't have to worry about as much, because I know every day I'm getting a little bit more Bitcoins. Every day I'm getting a little bit more Bitcoins. I am not in the trading market as opposed to compared to like my equity side, my stocks or my mutual funds that I own. So it kind of gives me a little bit of peace of mind over there.
And so I just wanted to open up the floor for any questions, right? If you guys ever have any questions regarding anything that we're discussing, please just shoot it into the chat box so that we can, clarify your questions and get it answered for you. Because the whole point of this session is so that we can tap into each other's knowledge and kind of learn a little bit off of each other, right?
I got a question for you, Don. I'm sure there's other types of safe haven assets as well, not just gold. Are there any other ones? And which, if there are they following a similar suit to gold?
Yeah, so traditionally, basically your commodities are seen as safe haven assets, right? So your precious metals like gold, silver, and then you also have your oil, because
oil's been getting crushed too, right? That's what I keep hearing.
Oil is getting crushed. It's at the lowest levels that it has seen since the early 2000s.
That's crazy. And oil's a safe haven asset? That's insane. Yeah, I keep hearing about that. I mean, gas is cheap right now. Gas is like $3 where I'm at in SF. Insane.
Well, $3 in California, that might be cheap. $3 here in Philly, that's expensive.
Yeah, it's almost like $4 here usually in SF. So, yeah.
Yeah, but because the reason, if you think about it, right, why is oil considered a safe haven asset? It's because, there's a finite supply. It's not like we can just go and make more oil, right? It's a commodity that's coming from the earth. So there's a fixed supply, and, oil is needed pretty much in all of your cars, in all forms of transportation, and people need to get around.
Well, unfortunately, we cannot as readily and easily go out and just buy a couple of barrels of oil and then put it in our backyard and wait for the prices to go up and then sell it back out, right? So that's why I like Bitcoins, because it's so much easier to get on, and if you want to unload it, it's so much easier to unload it. So with a click of a button.
Mm-hmm. So what I see is, I really think Bitcoin is validating itself as a safe haven asset, and it has just so many positive features that your traditional safe haven assets like gold and oil does not have, and that is basically portability. Because can you imagine trying to put $10 million worth of gold to your backpack? Let's not even go that extreme and say 10 million, right? Let's say like $100,000 or $200,000 worth of gold into your backpack and running away during a crisis, and or trying to roll a barrel of oil like down the street while you're moving it.
You won't be running very fast, I'll tell you that.
So that's one of the biggest advantages that Bitcoin has over all of these other safe haven assets, and it's not only that. Everything is on a public ledger, so everything is public knowledge, so it's irrefutable, right? It's basically fraud proof, because you can't just go on and hack the Bitcoin network and put a fraudulent transaction on there, unlike your traditional fiat currencies or your banks I'm sure everybody by now already know the big scandal that went on with Wells Fargo Bank, where they were basically creating fake accounts under like their customers and pretty much stealing billions of dollars from their customers. And that scam went unchecked for over a decade. And that's possible because it's a centralized entity where Wells Fargo actually had full control of all of the data, and they can manipulate the data however they want. But here with Bitcoin, where everything's open sourced information, it's basically a fraud-proof way of keeping track of transactions. And you can't say that with gold or your other traditional safe haven assets either, because let's say in your house you have 2 bars or 3 bars of gold or whatever like that. If somebody breaks into your house and steals your couple of bars of gold, that's it. It's gone.
Hey, speaking of that, Don, do you know the growth of Bitcoin wallet address in the last, just how about just in 2020? Has it been growing?
Yeah, so the amount, and you guys can actually go online and Google it as well. So I know that it's definitely growing. I just don't know the exact percentage. So let me just do a quick Google search, because I don't like to spread false information.
So these Bitcoin wallet address, which is unique, right? And it's a very good indication as to the adoption of Bitcoin market as a whole. Going back, well, Don is looking it up, but going back to like the Wells Fargo example, right? I actually was watching a documentary that specifically talked about these big banks, and Wells Fargo was one of them. They were so proud of themselves, saying that for every customer, they cross-sell them 5.6 times or something like that. Meaning that for every customer, they have 5.6 different accounts with this particular bank. Now, unfortunately, a lot of these accounts were just made up or made available to the customer without their knowledge. So, but with Bitcoin Wallet, it's very different, because it would have to be created individually by that person. So what do we have here?
So I just looked it up, and you guys can look it up online on Google as well by just Googling Bitcoin wallet growth in 2019. And what it shows here is basically every single quarter there's more and more Bitcoin wallet addresses out there, which means that more people are starting to use Bitcoin. At the end of 2018, we only have a slightly under 32 million Bitcoin wallet addresses. And by the end of 2019, we have almost 45 million wallet addresses already.
Wow, that's almost like a 50%, almost like 50% growth.
Yes.
In a matter of years, so which is huge market increase.
Yeah, and if you take a look at, from the end of 2017, where it only has about 21 million Bitcoin wallet addresses, end of 2018 is 31. It's going in the direction of like about a 50% increase every single year.
Yes.
So if it's compounding at 50%, pretty soon everybody's going to be using Bitcoin.
That's the hope. So we all need you guys' help to go out there and spread the message, right? Spread the message. Let your friends and family know what we do, and why do you guys, think that mining Bitcoin is actually a way to go, much better than buying and holding or trading Bitcoins, which is very, very risky.
Yeah, so does anyone have any questions for us? Please feel free to shoot it into the comments, and we'll address it.
And also, please, if you have any topics that you guys wanted to learn more about or hear about, or just hear about from our perspective, type it in we'll try our best to accommodate that.
Yeah, because we're trying to do this more frequently, guys. We're gonna do because we've been getting a lot of questions from our clients as well as just a potential prospects about what our view of Bitcoin, what's happening in the markets, and everything is. So that's why we're gonna be doing these live streams more often as well to address all of the concerns. So if you ever think of anything that you want us to address in our future live streams, please send it into our Telegram group or send us a message here in the comments section. Or just post it, send us a question on our Vbit page.
And thanks very much for all the feedback and engagement so far, guys. I really appreciate it. Liu, Kella, Harry, Lourdes, Gershom in here. Thanks for the kind words so far and the feedback.
And since James has this screen up on the screen for us, if you take a look into the top right corner, guys, that's today's performance of gold, the Dow Jones, and Bitcoin. You see, gold and the Dow is basically kind of flat, right there. It has moved under 1%. So gold is a little bit down right now at 0.18% of a difference. Even though it looks like such a small percentage, guys, but because it's such a large market cap, it means that gold just shed off billions of dollars today. Yeah. Every single percentage of gold that gold sheds off, it's tens of billions of dollars, guys. So even though it's just a 0.18% decrease, that's billions of dollars that just got shed off.
Would you say that today is a massive turning point in Bitcoin confidence? Like, there was definitely some uncertainty in the air. I mean, this is the first time we as a species are going through something quite like the coronavirus, and there's definitely some uncertainty. But it's just so good to see Bitcoin rally like this. Do you think this is going to? Yeah, what do you think about Bitcoin going forward, Don?
Well, obviously there is going to be a lot of volatility in the markets, but I really think this is a real big confidence booster for a lot of people, right? Because of the last Thursday, the first round of systematic sell-off saw Bitcoin drop to about $5,700 to $5,800, and just to be able to gain back some grounds from from that point, and we're over $6,000 right now, is a real big confidence booster, and it's a real confirmation that there is a lot of trust behind Bitcoin, and people are actually seeing it as a safe haven asset. And just to see it able to gain back some ground from the big loss, like last Thursday, which gold hasn't been able to do, which the Dow Jones hasn't been able to do. Basically every single market, every other asset class from all around the world has not been able to pick up any ground again, compared to where it left off last Thursday yet. But yet Bitcoin is starting to gain back some ground there. It's really comforting, and it's a real big confidence booster. And not only for me, but for a lot of the industry players right now. And if you really think about it, right, from a end user standpoint, if you're thinking about, you have a little bit of cash, you're thinking about putting money somewhere to make your cash grow, right? And you're looking at these charts, you see gold is down, you see Dow Jones every day is down, but yet you see Bitcoin is up by 17-18%. Which one do you choose? Do you choose, the ones that are going down every single day, or are you going to choose the one that is holding its ground and continuing to go up every day?
That's a very good point. I would also add to that, I don't like to see these big, ups and downs and fluctuations. And that's the reason why I keep going back and saying I love the concept of mining Bitcoins. And I'm actually very looking forward to next week when they have the mining difficulty adjustment that is coming up. I believe it's on Monday, correct, Don? If you can confirm that?
Yes. Yeah. So the mining difficulty level is early next week. It will change.
So I'm fully expecting that mining difficulty to go down. So therefore, all of us, for the same amount of hash power that we are holding right now, we're going to be mining just more Bitcoins for the next 2 weeks that is coming up after the adjustment. So great time to be mining Bitcoins. I don't like to stomach. I can't stomach these big fluctuations. So that's why I like, mining Bitcoins, because then I don't have to worry so much about, the price fluctuations, and I just sit back and collect my Bitcoins, and I'm happy camper.
And yeah, if you really take a look and think about it, right? If you woke up last Thursday and you saw, let's say you were buying Bitcoin or you were buying anything, right? And you wake up and it's down, you just lost 20% of your money, you just lost 50% of your money. You're not going to feel very good, right?
No, and in fact, I mean, I'll probably sell.
And I think most people would sell because they're afraid that it's going to go down even further, because that's exactly what the Dow did. If you were holding, Dow stocks last week and in the initial drop, if you didn't sell, you would be at a further loss today. So that's and it's perfect. It's a perfectly fine human reaction. They're going to sell, but eventually it's going to come back up, and they're going to be kicking themselves. Especially last week, like let's say when Bitcoin dropped to $3,800 or $4,000, a lot of people are panicking, thinking, oh, it's going to go all the way down to zero or whatever. Let me sell, just to realize today it's already back up to over $6,000. And I'm sorry, James?
I was just saying we got a couple questions when you get a chance to just load it up here.
Okay, yeah, let's just jump to the questions.
Okay, we have one from Evelyn over on the YouTube side of things. Good to see you, Evelyn. Asking about digital wallets, asking if they should be concerned if a digital wallet is secure from hackers. Are digital wallets secure from hackers? Maybe you could recommend a digital wallet for those concerned about security.
Well, honestly, yes. There's two types of wallets, right? A cold wallet and a hard wallet, and a hot wallet, or a cold and hot wallet. So a cold wallet is basically something that is not connected to the internet. It's a Bitcoin wallet that exists, on your a USB device, or just on a piece of paper, basically, which is one of the original forms of Bitcoin wallets. Or a hot wallet is something that is on an exchange, or that is connected to the internet. Yes, hot wallets are prone to hackers, but the thing is, reputable companies have taken measures where they have different firewalls in place. They have, an active team always watching out for hackers, and even back then with the Mt. Gox hack and stuff like that, they have learned their lesson. Basically, all the big crypto exchanges, including Bitcoin, including Vbit's Kaboo wallet, right? We don't keep all of the Bitcoins in that hot wallet that is connected to the internet. We actually practice a few different safety precautions, where at any given time, only about 5% of the Bitcoins that is under our custody is connected to a hot wallet. The rest is actually off-site in a cold wallet location that is not connected to the internet, which means that it's not hackable. So even if companies that practice those type of safety precautions and have procedures like that, even if they get hacked, maximum they're only going to lose about 5% or even less than 5% of the Bitcoins they actually hold, and the rest of your Bitcoins are safe. And they have already built in risk procedures to kind of offset the risk of being hacked.
Right, that's a very good point. So, and another security features that we have with Kaboo Wallet is you always get a one-time passcode that is sent to your phone that is registered with your member account. So that's another step that we're trying to take to protect your Bitcoins that are in Kaboo Wallet.
And thanks for mentioning that, Jason. I just wanted to touch up on that, right? So most of the times when you hear that like this person's Bitcoin wallet has been hacked, or that company that person's Bitcoin wallet has been hacked, it's not because like the exchange or the wallet system has been hacked. It's actually because of that specific person falling victim to a phishing scam, where they're receiving fake email telling them that some like your account has been locked or something. You have to sign in to unlock your account, or provide some details in order to get your account unlocked. And it's not actually that the company, the real company sending out that email. It's just a scammer out there sending you a fake email that they're trying to make it look official, but it's not really an official email. And then the specific victim actually clicking on that link and providing the username and password. So one of the things that we do to combat that is with our Kaboo wallet, and with a lot of with also Coinbase. So we kind of mirror off the security features of Coinbase as well, but we actually have other security features that even Coinbase doesn't have. But one of the security features that we have, just like Coinbase, is we have two-factor authentication. So even if you accidentally, gave your username and password to a scammer that through like a phishing email, they won't be able to log in on their computer unless they get the two-factor authentication code, which is a one-time use code, and it's only like it's only sent to either your phone or your specific email address on file. So, and that's only valid for one time. So if you haven't, like logged in and you're getting that, that code, then that should, like make you aware that something's going on, right?
Got another question coming from Cliff Barr over on the YouTube side of things. He's asking, what impact will Coinbase and other exchanges have on our business under current market conditions with respect to Bitcoin? And so it's kind of an ambiguous question, but does that resonate with you at all? Coinbase and these exchanges, is something happening with them?
Can you repeat that question, James?
It's what impact will Coinbase and other exchanges have on our business? Is there anything going on with them that comes to mind?
Well, honestly, we, like we're not an exchange. So what Coinbase and all of the other exchanges, what they do actually doesn't affect our business at all. But actually, Coinbase has been building an easier on-ramp for people to get involved in Bitcoin, which is a positive thing for our business as well, because the easier people are able to, like buy Bitcoin and sell Bitcoin, turn Bitcoin, the Bitcoins that they mine or the Bitcoins that they bought back into US dollars or fiat currency, and then depositing it into their bank accounts, it's going to increase adoption. And when it increases adoption and awareness, that's actually a positive thing for our business.
Yeah, I totally agree with Don. When you look at the Bitcoin value chain, we are in the mining vertical, right? Whereas Coinbase or blockchain wallet, they are in the exchange vertical. So it's two complete different animals. But any development in terms of the infrastructure is only going to be positive for all of us who are in the crypto space or Bitcoin value chain.
So I see a question from Kella Good in on the Facebook side. It says, would you suggest using a separate email perhaps for our wallets? In her case, it's she's using the same email for X amount of years for everything, online shopping and everything like that. It's actually it's always a good safety precaution to utilize a separate email address, specifically, like for your mining or specifically for, your financial accounts, and keep it separate from, your online shopping and stuff, because the more you use one email for, it's the more of a an opportunity that scammers can, like fish out, like your username and passwords, because now you're not only on the lookout just for a scam email coming from, let's say, your bank or or from Vbit or some other financial institution, but you're also looking out for phishing scam emails from Amazon, from all of your shopping sites too. And unfortunately, most people use the same username and password across the board for all of their accounts too, which makes them even more vulnerable to getting hacked. Because like, let's say if I see, if I'm using one email address for everything, right, and I see an email coming from Amazon saying that my accounts got locked and I need to enter in, like some information in order to unlock it. I'm inputting that username and password for Amazon, but because I use, like the same username and password all across the board, now, I'm vulnerable to them taking that same username and password and hacking everything else.
Right, and we should have a good, practice where every website should be a different email address, different password.
To piggyback off that too, the number one thing you can do, right? I don't know if you guys are on the same page, to increase security is to add two-factor authentication to your email or to whatever account. So I'm pretty sure with Gmail and some of these other big main ones, you are able to do that. Two-factor means you're going to have your phone on you pretty much every time you log in, and you're going to have to input a dynamically generated code. I mean, that will 10x or 100x your security on the account if you do enable that. That's going to give you some peace of mind. It's kind of annoying, but it's probably worth it if you're dealing with safeguarding your money.
Yeah, it is. Great point, James. I mean, thieves are interested in those lower hanging fruit, right? So the easier the most vulnerable ones are the ones that are most at risk. Yeah, it's kind of obvious, but so by doing just a little bit more to protect yourself, like the two-factor authentications or using different password for different sites, you just automatically increase your protection by X, number of times. So.
And also, if you're deciding to, I think using two-factor authentication is actually a better method than using different emails for everything, right? Because because then at that point, maybe you don't remember all of the email addresses that you just created. But using two-factor authentication, it gives that extra layer of security, and it is going to 5x, 10x, like your security. Because now not only do scammers have to get a hold of your username and password, they actually have to get a hold of your physical phone.
Sure.
Which, more likely than not, it's not going to happen. So I hope that adequately answers your question, Kella. And I see a question coming in from Odette on Facebook. It says, is it safer to keep our Bitcoin mining money in Kaboo than in Coinbase? So to answer that question, Odette, Coinbase and Kaboo, it's basically the same security level. So safer or not, that's not really the question, because it's the same level of security. We do have two-factor authentication just like Coinbase, but where Kaboo is going to have an advantage over Coinbase is there is a lot of new features that we are going to be rolling out that Coinbase holding your Bitcoins in the Coinbase wallet is not going to have. And we're gonna, like once we're ready to roll it out, once we complete the beta phase of our Kaboo wallet and ensure that it's working properly, I'm going to let you guys know what the new exciting features are, and I really think you guys are gonna really love Kaboo once we roll out of beta and roll all of the new features into it.
Yeah, I mean, this is actually to Don's credit. I mean, effort. He's always thinking from a, perspective of our members. How can he make the company better by, saving our members money, right? So if you've been using Kaboo, you know that Kaboo to Kaboo transfer is free. And more of those additional features that Don and the engineering team are working on is going towards that direction. So
And I see a question on the Facebook side from Gershom. Is there any information that shows us if other mining companies are beginning to shut off their rigs? And yes, Gershom, you can just Google Bitcoin hash rate chart, and the first
I'll pull
result
it up for
basically
you.
is blockchain.com. Yep. And this hash rate chart actually gives you the hash rate that is currently committed to the Bitcoin blockchain. And the hash rate is directly dictated by how many machines are currently online. So when other mining companies or other Bitcoin miners are turning off their machines, there's going to be a decrease in hash rate. And as you can see on the chart that's on the screen right now, it's been like the lowest it has been in the past 30 days basically. From the high point it has dropped like about 30%. Okay, and any other questions you guys might have? If not, we're gonna start to wrap up this live stream.
Ask now or forever hold your peace, ladies and gentlemen. I learned a lot.
Well, we have another ones. We have other, we're going to be doing more of these, consistently. So even if you don't remember what your questions are, you don't have a question right now, you may have one for the next session. So don't worry.
And also, please keep in mind, we're going to do this more consistently too. So if there's any topics that you want us to cover and talk about on our live stream, we'll be happy to cover it and get all of your concerns addressed. So if you have anything that you want to see covered in the future, just shoot us a message either on Facebook or through our Telegram page. So I have another question coming from Gershom. Speaking of the mining difficulties, is it a guarantee that the mining difficulties will decrease in the coming week? In other words, if Bitcoin recovers strongly, will mining difficulties still decrease? So the mining difficulty level is a direct measure of the hash rate that is on the blockchain. So you can accurately predict if the Bitcoin mining difficulty level in the next adjustment is going to increase or decrease by taking a look at the hash rate chart. If the hash rate chart is showing that the hash rate is coming down tremendously, then in the next mining difficulty level adjustment, there will be an adjustment downward, which means with each hash power you're going to be able to mine more Bitcoin. All right, I guess we're going to wrap up our live stream for today. I really want to thank everybody that has joined us today, and for all of the kind comments that we have been receiving. I really hope that you guys kind of like our podcast, and if you do like our podcast, please drop us a like on both YouTube and Facebook, and drop us a positive comment if you like our podcast. And we look forward to doing this more often. Any closing thoughts, guys?
I just wanted to plug the YouTube. So there's a good amount of people watching over on Facebook. There's 23 people watching. If you guys could do us a huge solid and subscribe or consider subscribing to the YouTube channel as well. We are multi-streaming, as they say, so we're broadcasting simultaneously across different platforms concurrently, and we do have a few folks over on the YouTube side. But if you are interested in video related content and live streams and stuff, definitely consider subscribing to the YouTube. But other than that, just thanks for hanging out with us, guys.
Okay, awesome. Well, thank you guys, and thank you, James, for helping us put on this podcast. Have a good day, guys.
Have a great
Take
night.
care, everybody. See you later, Vbit family.